Airbnb is the leader in short-term rentals, vacation rentals. You may have used one on your vacation. I certainly use Airbnbs exclusively now. It's just a much more comfortable experience, and I think you have a better trip overall. They have just grown from really a startup a little over 10 years ago to now being just a giant travel company. My name is Victor. I have an MBA, a lot of business experience, and I like to do analysis on companies that I look to invest in. In this video, I'm going to be taking a look at Airbnb. Do me a big favor and like this video and consider subscribing to the channel if you like videos like this one. Let me tell you about Airbnb. I invest and look for 4 things in a company and then make a decision to buy, hold, or sell a particular stock. First, I want to know that I can be an owner, I can understand the business, and I could really like and understand the industry. I want to know that the management team's doing a really good job operating the company. I want to know that debt is under control and less than 3 times EBITDA. And I want a discount on the stock. At the end of the day, I want to make money. And if I get a discount on the front end as I purchase shares of stock, and I could see my investment go up in value over time. Based on the answers to those questions, I decide whether I'm going to buy, hold, or sell. I really like this story around Airbnb. They do private short-term rentals around the world, especially in the US. You can find an Airbnb in just about any place. It's really interesting. It's really fun. It's my preferred way of staying in a city or a resort area. I've been in Airbnbs all over the country, Canada. I've been in Airbnbs in Mexico City and other parts of Mexico. I've been in Airbnbs in Europe as well. And it's always a neat experience to rent out a private residence. And I'm not alone. Airbnb is really flourishing because they have a business model that's new. And now that we have a connected world with everybody being on a computer or a phone, we could find each other, renter and owner of a property on Airbnb. And then that's where the connection happens. So I love the company, and I think the industry is new, but these guys are really disrupting the travel industry. I think hotels are taking notice. I think there's still going to be, a place for hotels. But I think they're taking notice that, hey, people really do prefer to stay in a home with more square footage, more comfortable, integrated into the community when they travel to that part of the country. So I love the company. I love the industry. Airbnb is just really flourishing. Their revenue for the quarter, they closed their Q2 quarter last week. They grew 18% year over year, and they're at a $2.5 billion run rate. Just awesome job, Airbnb. Net income, they're profitable. For a company to grow this quickly, to be profitable, that's pretty darn amazing. So it's great to see that. EBITDA looks great. And free cash flow. This is a free cash flow producing company. They've been public for about 2.5 years, and they already they have a run rate 12-month trailing 12 months, $3.9 billion. So just a really valuable business, in my opinion, and it's really working. They're really profitable. They continue to grow, and good job, Airbnb. Their income statement looks really good. For the first half, their revenue grew nicely at 18%, and they're nice and profitable. So what else could you ask for? Growth and profitability. Their balance sheet is in great health. Their debt to EBITDA is 0.69, well below that 3 that I'm looking for. They have a high level of cash and very little debt. My favorite statement is the statement of cash flows, and Airbnb just put up an awesome statement of cash flows. In the first 6 months of 2023, cash flows from operations were roughly $2.5 billion. Phenomenal. And they have very little need to put capital into the business. They're an intellectual property company. They're putting an awesome website online. They have that IP, they have the brand, and they don't have to put a lot of money into the business. They could just really harvest a lot of free cash, which makes them very valuable. You study the big mega tech valuable companies like a Google, an Apple, Microsoft, Meta. You look at them and they have a lot of IP. They're able to really capitalize on that IP and generate a lot of free cash. And I think Airbnb is headed in that direction. I believe Airbnb is discounted by 37%. And here's why. I value Airbnb using the discounted free cash flow method, as well as the earnings per share discounted method. And I'd like to take you through that analysis that I get to. The trailing 12 months of their free cash flows are $3.9 billion. They're growing very quickly. I'm just going with 10%, even though their cash flows are growing much faster than that, just to be conservative. In the first 4 years, I'm going to grow by 10%. Then after that, just grow at 5%, again, conservative. So the cash flows that we're expecting in the first 4 years as well, as well as all the cash flows into the future, are these cash flows, and I'm going to discount them by a logical discount rate right here. I get to a current value of all those cash flows of $118 billion. I add the cash that they have. They have very little debt, so I take that away. And there's an equity value of the company of roughly $126 billion. Current market cap's only 89 billion. So you can see where there's a 42% discount available on Airbnb using the cash flow method. I calculate that each share is worth $198 per share using the cash flow, discounted cash flow method. And right now you can buy shares at $140 a share. Earnings per share, they're doing really well against this number. They're profitable, and they do deserve a very high PE because they're a growth company and leader in their industry, a real disruptor of a company. And I'm going to grow that earnings per share by 5% each year. Based on those numbers, we get a 29% discount using the earnings per share value. And I would say that in the future, this will get higher. This number, earnings per share, in 2 years is probably going to be closer to $10 per share. I combine these two. I take more weight into free cash flow method versus earnings per share. I basically take 2 parts free cash flow method, 1 part earnings per share. And I get to a blended discount available on Airbnb at 37%. Looking at the scorecard, I definitely want to be part owner in Airbnb, and I think it's an exciting, disruptive industry that they're in. The management teams is the best in the business. They operate the company exceptionally well. Debt is very low, well below 3 times EBITDA. Nice little discount available on Airbnb. So I'm going to continue to buy shares in Airbnb. So looking at the history of Airbnb, they've been public, I guess, a little over 2 years. They went public at the end of 2021, and the stock price really went up because people were excited about the stock price. But since then, the stock price went down along with a lot of stocks that had gone down in 2022. And it was a great time to buy Airbnb. And in 2023, we've seen the stock really go up nicely. It's gone up 64%. And more recently, it's gone down with this correction that we're seeing in the market. So it's an interesting stock. It's a young company, but you can see that I value the company at $192 per share. I think there's still room. I'm a value investor. There's still room to buy the shares at a discount. And I think that number was going to continue to rise because I think that the performance in Airbnb will continue to rise and get better. So that's my video on Airbnb. I hope you enjoyed it and found it interesting. Do me a favor and like the video. That'd be a big help and I'd appreciate it. And consider subscribing if you want to see videos like this. Again, hope you enjoyed the video. Good luck investing in 2023.